Hi, I'm John Cunningham. I want to spend the next few minutes telling you about my law practice under Section 199A. It's a brand new practice for me. I've only been doing it for a year, but then the section's only been there for a year, and it's new for everybody else who practices in this area. Section 199A is, quite frankly, an amazing new section of the Internal Revenue Code. It was enacted effective 1/1/2018, and basically it provides deductions of up to 20%, and I think they can be even larger than 20%, to the owners of pass-through businesses. And pass-through businesses include sole proprietorships, subchapter S corporations, and partnerships. For example, multi-member LLCs taxable as partnerships. So 20% deduction from your share of your pass-through business income. The deductions can be readily thousands of dollars per year for owners of these companies. One of the main things you have to know up front about Section 199A is that it is an extremely difficult section to understand because it has so many different purposes that Congress wanted to pursue. It's written in dense taxes. It's lengthy, about 4,000 words in 9 subsections. It could have been drafted a lot more clearly than it has been drafted. It's monstrous. And then there are final regulations which came out January the 18th, which are another 247 pages of dense taxes. So just understanding the section itself is very difficult. Frankly, it took me weeks before I felt like I understood it comfortably. But then the hardest thing of all about it is that the point is to maximize your Section 199A deduction. And often this means that you have to significantly and sometimes radically restructure your business. If you're single, you may have to get married. I'm serious. And there may be other restructurings of your personal, your financial, your business, and your tax affairs in order to maximize your deduction, but it will often be worth it. For example, you might be an employee and stop being an employee and become an independent contractor and suddenly get huge deductions you couldn't have gotten. The section itself is very difficult to understand for most tax professionals. There's 247 pages of commentary and final regulations on the section, and that's where the difficulty begins. The real difficulty is restructuring to maximize. So my practice consists of the following. First, asking a bunch of questions of my clients in order to learn whether they are maximizing their deduction. Some of the questions are about, do you file separately or jointly? What is your taxable income, joint or separate, do you expect you and your wife, or just you if you're single? Some other, what kind of wages will your business pay to its workers? What kind of assets does your business own? What do you think will be your net business income for the coming year? These are some of the questions, frankly, the main ones that I ask. Then I look at your current situation and I say, based on the facts that you've given me, it looks like your 199A deduction for this year, in this particular year when I'm speaking, it would be 2019, your deduction is going to be whatever it is, could be, let's say, $30,000, $40,000. The deduction will be capped at 20% in general of your taxable income less net capital gains. So you multiply that figure, say it's going to be, I'm not going to try to do the arithmetic because I'm terrible at mental arithmetic, but in generally, if you're making $100,000 after you subtract net capital gains, you can get a $20,000 deduction. That's the 199A sub A cap on your deductions. So we figure what your deduction is, and then I figure, well, is there anything we can do to increase that deduction? And the most common thing would be, thousands and thousands of pass-through businesses. In fact, 4.3 million of them are S corporations, either single shareholder or two shareholder. And those people probably need to stop being S corporations, but rather to become sole proprietorships or tax partnerships, multi-member LLCs, because this can greatly increase their 199A deduction. But it really depends upon lots of different facts. So I ask questions, I compute what your deduction would be right now, I decide what you could do to maximize that deduction, and then if you want, I implement that maximization. For example, right now you're a state law business corporation taxable as an S corporation. You shouldn't be in order to maximize your deduction. You should be a single member LLC taxable as a sole proprietorship, or maybe you should get your spouse on board and become a partnership, because then you can also save Social Security taxes. So that's what I do in my 199A practice. I've written at great length about this practice. My publisher, Wolters Kluwer, has published my book about it. It's called Maximizing Pass-Through Deductions Under New Internal Revenue Code Section 199A, a Practice Manual. It's available online at a Wolters Kluwer website called Cheetah. This is what the hard copy of the book looks like. But if you'd like to learn more about the about my 199A practice, I would welcome your call. Thank you very much.